Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Monday, April the 6th, and so glad to have you here with me. I appreciate so much when you guys jump on. We are going to do some live trading today for educational purposes only. I'm going to be analyzing the market and I'm going to be just doing some teaching as we go. This is an educational place. This is a free stream. So if you do choose to follow my trades, you do it at your own risk. This is for educational purposes, but I love having you guys here with me. And if you have any questions or comments, you're welcome to throw those in the chat. I want to be able to tackle as many of those as I can and help you with any comments or questions you might have. All right, Gavilan is here. Good morning. And Craig is here. Hi, Craig. Welcome. And as you guys can hear, I am struggling a little bit with some laryngitis, but I'm not sick. I had a really good time with my kids and grandkids on Friday. I took everybody to our local little, what do they call it here? It's just like an event center, and they've got laser tag and bowling, and we just had such a good time running around and playing laser tag. It's one of my favorites. I love to do it, and the kids love it. So I don't know if I was yelling. I don't know what went on, but ever since then, I've had no voice. So you'll have to put up with this raspiness, but I appreciate you guys being here. All right, let's talk about. Oh, by the way, I hope you all had a very lovely weekend. I hope some of you got to enjoy a long weekend. I did. Took Friday off, so that was a lot of fun. And I hope you guys all got to do that as well. Okay, so let's take a look at what we're getting here. Nothing but sideways chop. And what is the area of interest today? Can anybody tell me what's the big area of interest today? The big magnet and it's a combination of a magnet and a repellent. It's kind of pulling and pushing today. Gideon, good morning. So good to see you. It is pulling and pushing today. Anybody know what's going on here? Let me show you. We are fighting once again with our 6,600 level on the SPX. We have not been able to break that. We're getting some signals for a put here as well. I am going to go ahead and load some puts. Give me just a second. I am looking at 658 puts. I'm not in them yet. We are right here sitting at the VWAP. As you guys remember, the VWAP stands for volume weighted average price. It's nothing more than a moving average, but it gives a little bit of extra oomph to the volume. So when we've got spiking volume, the VWAP tends to respond more quickly than the typical moving average does. So I do love the VWAP. It's used by a lot of algos. So that is why I keep it on my chart. We do find a little interest here at the VWAP. Many, many days you'll see us moving toward it or away from it and coming back to it many, many times. So if you take a look at today's action, what have we done? We've done nothing but come under it and over it all day long. And we've really not been able to break strong way to either side. So we've pulled under it a couple of it, pulled under it, and it's this white line right here. I know my charts are full of lines. I apologize. They look so, but this heavy white line right here is the VWAP. And you can see at the open, we opened under it, came over it, under it, over it, under it, over it, under it, over, under, over. And right now we're just sitting just barely over it. The other area, what I was trying to talk about earlier, the area of interest that we have been fighting with all day long is the SPX 6600. Yes, sir, Gavilan, you got it. Take a look at the 6600 level on the daily chart. This is our SPX, which stands for the S&P 500. That's our index. SPX 500 I like to chart because it does not run 24/7 like the SPY and the futures do. I can see gaps clearly. To me, it's just an easier read. And I track most of my support and resistance. I track on the S&P 500. I do track some lines on the SPY as well, but I do like charting the S&P 500 the best. And if we take a look at this chart, what can we see? Well, right here, this line is our 6,600 line. We have pierced it once, twice, kind of baby pierced there on Thursday. And today, with a little bit more conviction, we pierced it and came up. And yet here we are right at that 6,600. They're just some magical overhead ceiling that we have not been able to break. And look at it's not just the last 3 days. It comes back over here to the 25th of March. It comes back as resistance over here on the 24th. We pierced it and closed below it on the 23rd. We closed below it on the 20th. And we just closed above it on the 19th. So this has been a really big area of confluence, congestion, basically congregation. Everybody's hanging out here. And so the bulls have got to pierce 6,600, not pierce it, they've got to recover it. The other thing that's corresponding with the 6,600 right now today is this yellow line. We are coming down, guys, back down through the VWAP. I might consider puts here. Let's see what we get. We're just sitting on the VWAP here. Nothing more than a big range today so far. Tough trading. I am going to load 658 puts. I think I said that earlier, but I'm still looking at those. Again, if I take a trade, that is for your educational benefit. I'm not suggesting or recommending any trades. I'm just doing this for learning purposes so that you can hear how I talk through my trades and why I take them. If you choose to follow, you can do that at your own risk, okay? All right, so I'm just watching right here as we analyze this daily chart. I'm keeping my eye right here on this VWAP. We're just on it. Good morning, Guy. Good to see you. Just sitting right on it here. Let me zoom in just a little bit. Going to look at that VWAP up close and personal right here. We are getting some put signals, but it's really trying to hold. You see, it's been holding for, really back since over here. About 30 minutes, really. All right, starting to break. It looks like we got to be careful with these breaks because sometimes they're little fake outs. 65.95, so we're still below 6,600. This is the magnet today. This is the magnet. This is the line to break. The bulls have to break 6,600 today. If they don't, I just don't see anything good happening. It's been many tries with no success. If they don't bust up through here today, I don't see anything good happening. And we've got big data coming this week. So don't forget that. We have PCE on, I want to say it's Thursday, and CPI on Friday. These are big numbers. These are the numbers that the Federal Open Market Committee looks at, the FOMC. They look at these numbers to make determinations as to whether they will keep the rates steady, increase them, or lower them. That's a big deal for the market. It's a big deal for our economy. They have basically one tool in their tool chest, and that is interest rates. So they manipulate them as they see fit based on what the data tells them. And that data comes out monthly. That's the CPI, that's the Consumer Price Index. The PCE is the Personal Consumption Expenditures. These are both indexes that measure the consumer and what they're spending. And it tells the, not just what they're spending. Oh, okay. I'm going to look at these puts more closely now. Not just what they're spending, but in essence, what the prices are. And so these reports keep an eye, they keep track of what the prices are. And that's how the Fed tries to measure inflation. Our prices going up, our prices staying the same, our prices going down. Well, you and me, who live in the real world and not in these ivory towers, we know that as personal consumers, at the American consumer, we know prices are in fact really going up. Inflation is extremely underreported. We know that. Well, look at the price of coffee. My goodness, I just bought coffee yesterday, and I'll admit I'm slightly bougie with my coffee, but um, it's $21 a pound, um, which is like insane. That's triple what I was paying a year ago. I can remember the prices. And that's just one example of, where prices, not just in the food category, in the shelter categories, these are the big ones for the average American. Food and shelter, of course, the basics of life. These are the categories that are getting hit. This is where we see inflation hit the hardest. And it's hogwash that inflation right now is, what is it, at 3% or something? Baloney. Everybody knows that we are enduring way higher inflation than 3%. And it goes also with the unemployment, right? The unemployment sitting at 4.3%, baloney. It's all baloney. But be it what it is, right? It is what it is. And these are the numbers we have to work with. These are the numbers the Fed works with. And this is what moves the market. So we have to follow these numbers and understand them. All right. Guy saying, I find it interesting on the 5-minute, when price returns to the opening, it usually bounces. Notice the bullish engulfing patterns. Thank you so much for that, Guy. I will take a look at that. I am getting a little closer to this put here. They're just keep trying to dip it below the VWAP, but holding 65.97 again, right here in this 6,600 range. And I do want to look at that 5-minute guy, because you're exactly right. We do get this return to the opening range. We get it over and over. We see it almost every day. And those engulfing candles are telling, right? They do. And what an engulfing candle is, for anyone who's not familiar with some of the candle patterns, every little bar here on this chart is called a candle. It's a candlestick. Every candlestick has 4 parts. It has a high, a low, an open, and a close. As measured by these wicks, they measure the high, the low, the body measures the open, the close. The engulfing candle is a style of candle which engulfs the previous candles. It doesn't matter what color they are, the previous candles. For example, you would call this an engulfing candle right here, this red one, because it is engulfing. It is bigger than covering, consuming the candles before it. It's consuming this one, and this one. And I'm being liberal, right? Because we didn't quite come up over here and engulf this one, but you get my idea. This green one right here is engulfing. It's engulfing these previous 4 candles, right? Or 3 at least. And an engulfing candle is trying to tell you that this is when a candle engulfs one or more previous candles, it's trying to tell you that this is a stronger direction, a stronger momentum. Now, when we look at the minute chart, remember it's noisy. So candle patterns are going to be more and more meaningful and accurate the higher the time frame. On the minute chart, it's a lot of noise, but they're still valid and they're still important. And so you make a great point there, Guy. I'm going to look here at the 5-minute in just a second. I'm still kind of watching this battle here at the VWAP, this battle at 6,600. And let's go back to our daily and look at it one more time. So we're looking at these candlesticks. We can see this 6,600 really, really an area of interest. And let's watch and see today. This is the area to watch. And I said this on the previous stream. If we get a strong break upward over 6,600, that we could get a big push, right? We could see the market respond and push higher. If we can't get over that today, I really do think we're going down this week, especially with big data. I think it's a big possibility. The other level that we're watching, I mentioned it a minute ago, is the 21 period moving average. Look at this. This yellow line right here is our 21 period exponential moving average. And I went over the difference in averages on the last stream. Let me give you a brief understanding of the difference between an exponential moving average and a simple moving average. All of these moving average lines are created by taking the price as far back as the a period calls for. So in this example, this is a 21 period. It's going to go back 21 periods. It doesn't matter the time of the chart. It's going to look at 21 candles. It could be 21 daily candles, 21 minute candles, 21 hour candles. It's still going to take an average of the previous 21 candles. Now, a simple moving average is exactly what you would think that it is. The same as what we learned in math class, right? It goes back, it takes 21 periods of price, it adds them all up, and it divides by 21. That's a simple moving average. An exponential moving average actually takes that average but puts more weight on the current candles. So it takes that 21 period average, but it says, oh, these guys are a little bit more important than the other 21 altogether. And so the exponential moves a little bit faster, is a little bit more sensitive to price movements. So I use exponentials on almost every period, on almost every measurement, except for the 200-day moving average and the 100-day moving average, because those are tracked by institutions and I want to see what they're seeing. So back to our 21, we're sitting right under this 21 period moving average, which also happens to be sitting at our 6,600 level on the SPX. Isn't that interesting? And it is interesting because you can see it makes sense, right? Look at all of these candles trying to hug 6,600. This average is only reflecting that. It's only reflecting that this is where we're trying to sit over the last 21 periods. So we have to beat this 21. We have to beat the 6,600, the bulls do, if we're going up. If we don't do that, I predict we could be coming down this week, especially with big data. So be aware of that. Now, if we charge up through it and recapture that 21, the 200 is not that far overhead. That is the next bull target. They've got to come grab that 200. If those things happen, it's off to the races. We are definitely charging upward. So this is a make or break space today. So just keep your eyes on that. This is how I'm trading today. I'm trading around the 6,600 rejections or breaks. Okay. All right. David 2C, good morning and hello again. All right. Guy is saying it's good for scalps. I believe you, Guy. So we've got a minute because we are still just flatlining right here on the VWAP. Let's take a quick look at the 5-minute that you're talking about, Guy. I do have a 5-minute going down here on my SPX, but let's look at it on the SPY. And your point, Guy, earlier was that when the price returned to the opening price, okay, so here's the opening candle on the 5-minute chart right here. Big candle, pretty good size. I mean, not compared to other days, but for today, we can see it's a decent sized candle comparing it to the other candles. Let's see, what are we at? 74 to 59. So basically a 15-point candle if you measured it on the SPX. And Guy's point was when we return to the opening price, it bounces. And so we did have a push up. We came down to the opening price. It did give us a little bounce, but look at where we are, Guy. You're exactly right. We're really kind of hovering around this opening bar. Now, the opening price, of course, is down here at 655.8. And we have not been able to break that opening price. So you're exactly right on that, Guy. in this movement right now, we're staying under the high of the 5-minute candle and above the low. This is known as the opening range, and you can measure the opening range many different ways. But by and large, we have stayed within the 5-minute opening range. We did beat it and then came back inside of it. I like to measure the opening range with 15-minute increments. That is what my green bars represent. So this green bar right here is the top of our 15-minute opening range. This green bar down here is the bottom of it. We are currently inside of that range. When we get breaks of the range, we can trade those. I don't usually trade an opening range break, but I do watch them. All right, we are coming down below the VWAP. Let me get back to my minute. I think I like puts here. Although this move has been going for quite a while, you know I don't like that. And our VIX is a bit flat here. Sitting at 65.92. Getting a little bit of a break here. Do we want to try puts? Let's see if we can get a little bounce here. This is a long sideways move, so I'm cautious. 65.91. $65.92. Getting a little slow down here. Now, it's important always to stop and look left. What do we see when we look left? Bottom, bottom. Watch these guys. If we don't break this bottom, I wouldn't take a put here. You can see we're getting a little reaction. So I'm watching that. And this downward move has been going for a while. So that's another reason why I'd be cautious with a put here. We are below the VWAP. We could have maybe traded this break here, but we would have had to have been fast. And we were close to this. So every few minutes, it's important to stop, zoom out, and look left to get an idea of where our supports and resistances are intraday, in the middle of the day. So we know our supports and resistances on the big picture, but we've also got to take a look at the intraday supports. Those are really important. So we see it one here and one here. This gave us a bounce so far. So we're going to be cautious with any kind of puts when we've got a little bottom here. Okay. When we start moving up, if we do, what we want to see is the little top at 6,600. Could we trade that to the upside? I think so. Do we have enough room for it? We've got about 6 points. That's pushing it on the risk reward spectrum for me. 6 points is not usually enough room to make the reward worth the risk. So I'm usually a little cautious about a risk to reward of 6 points. And the reason I'm calling it a 6 points is because 6,600 is that zone. Now we've broken it. We've come up over it, but we're really defending it here. Bears are really defending it here. So I'm not going to trade on an idea that we could break 6,600. We haven't done it yet. I'm trading on what we are doing. Okay, so here's back to this little bottom. If we break this, I might take a put here. See where my cursor is holding? 656.7. Look at that. Look at where that wick came. Right there. 656.7 is our current intraday bottom, basically. Let me say it this way. It's not our bottom. It's our current support, because we have a lower movement over here, right? So it's not our bottom, but it's our current support. And that's what I'm watching. And look at do you know what these candles are designed to do? These long wicks here. You know what they're designed to do? If it's what, I don't know yet. We need a few more minutes and I can tell you for sure. But a lot of times these long wicks are kind of designed to sucker you in, right? If you're not looking left and you're not paying attention to this little intraday support and you see this wick down or this wick down, after this little movement, what is the average retail trader going to do here? Oh, they're going to buy puts. That looks like a really tempting movement right there. Now, I'm not saying we won't come down and break it. I think we could, but we didn't yet. And so these movements can be designed to sucker people in. So I'm always cautious of that, especially when we're close to an intraday low. All right. David saying, for the record, they're waiting on Trump to speak today. Yeah, I did hear that he was going to speak. So thank you for sharing that, David. You are exactly right. Trump is the market whisperer. I've never seen a president who was so tuned into the market and could move it so easily with the things he says. I actually pay very close attention to what he says because he's always able to move the markets. All right. Right here at this bottom again. Dan is here. Good morning, Dan. Let me see if I can see that on my data, David, because I do remember hearing that. 1 o'clock Eastern is where I have it, David. I don't know what you have, but I'm showing it at 1 o'clock Eastern for President Trump to speak. Greg thought I was the market whisperer. I wish I were the market whisperer. I just try to listen. So I'm not the one speaking. I'm the one listening, right? Trump is the one speaking usually, or the feds are speaking to the market. But usually I'm trying to listen. That's my goal. All right, coming down again. I just don't know that I trust this downward move. Like I said, it's gone on too long. We're holding an intraday bottom. Could it break and dump? Yeah, absolutely. But I'm going to give it a wait here and see. A wait and see. Yes, at 1. Yep, exactly, David. Thank you for reminding me of that. I appreciate it. David, he said that Iran gave a significant proposal, but not good enough. Okay, thank you for that. I know the last I heard, what Iran wanted was reparations for the war damage. That was one of their big things. So I don't know. I would imagine that would be part of a package. I would think that would be part of an agreement, but who knows? All right, we are losing this intraday support. I am looking at 657 puts. Going to wait. Again, I'm not completely convinced, but let's see. Okay. Okay, little response there. Long lower wick. Back to the intraday support. Get back over to my futures chart. Little bounce. That would have been a tricky one to try to make money on, to try to play this break of intraday support. Look at it, it was pretty fast. I think I could have caught it, but I didn't try. We would have had to been pretty fast on that one. And now it's given us a little bounce right back into the range. Well, right back into the low, the intraday low, intraday support. I'm going to let the put move pass, I think. Could we drop? Yeah. Yeah, we could, but I'm going to let the put move pass. It's just too old, too much support here. Here's a little counter move. Let's look at calls at 657 strike. This is for your education only. If you choose to follow, do it at your own risk. I'm just showing you how I do it. So I'm holding 657 calls, but not order. I'm not buying anything. I'm not in anything yet. I'm just getting my order ready. I'm not in them yet. Little pull right back down. And we could toggle over to puts again now that we've had tiny little reset here. We had an itty bitty little reset. Let's look at puts again, 657s. Good morning, Kevin. There was a little gap down about 6 minutes ago. Thank you for sharing. I'm going to try for a really quick put here. I am in. It's getting bouncy here at the bottom. And a little bounce up here. We are up 7 points over the flat line. What I'm kind of looking for here is a move back down to the zero line. It doesn't have to happen, and this could be an intraday low again. We'll see because it's given us a bounce. Sitting at 65.90. I imagine we'll come up and test 6,600 again. Looking like it might want to bounce here. Did we beat our previous low? Let's see. Nope, we did not. So we could come down and test this low or this low, or they could just reverse it here. That's looking like a reversal to me. So we're still trading below the VWAP. All right, there's a bit of a little rejection here. Let's see. All right. Just kind of hovering here. Let's see if we can come back down to this low. There's a little downward movement. That's good. All right, we're just kind of hovering here. Yep, there's our push. Testing the VWAP. And let's see what our leaderboard is saying. Apple is up today, 1.2, Amazon 1.2, oil up to 112, which is interesting because we'd expect to see the market down a little bit more with oil moving up. Brent also up. Meta up 0.6. NASDAQ is up 0.2. We're up 0.18. The Russell right in here with us at 0.2. The Dow kind of closer to its flat line at 0.13. The mags have really come down. That's interesting. Mags are sitting at their flat line right now. That's interesting to me. Remember, the mags are it's an ETF that holds the so-called Magnificent Seven stocks, the big tech stocks. Those are the ones that move the S&P 500. They move the NASDAQ. So I like to look at them as a whole, and you can do that with that ETF by the name of MAGS, M-A-G-S. All right, another little move here, another little shot at the VWAP. So basically, we're in range. We're still pretty close to our opening range. We're inside of that first 15-minute range, and we're real sideways here. Very sideways. Not a lot of movement at all here. Our VIX is sitting at 24.2, which is still elevated, even though the VIX is down today. It's down just a little bit, 1.4%. But we use the VIX to measure the volatility, and that tells us how fearful the market is. And the higher the VIX is, the more fearful the market is. As the VIX comes lower, the market goes higher. As the VIX goes higher, the market comes down lower. So VIX today is down just a little bit, and the market is up just a little bit. So that's matching up today, right? Market is up 0.2%. That's just a little bit. All right, looks like another shot at 6,500 here. We're sitting at, 6,600 on the SPX. We're sitting at 65.95, coming up to the VWAP. Definitely moving up. And chances are pretty good, in my opinion, that we have seen the high of the day. I could be way off base, but I do think we have seen the high of day. So my guess is we'll stay below these levels here. And there's a push. Right at the VWAP. Small candles. Volume not too impressive right now. That's because we're in sideways chop. VIX is slowly moving down here. Sitting at 24.08. Now this area right in here has been our recent, very, very recent small intraday resistance right here. All right, Craig, when there's only sideways chop all day, do you take any action at all or just watch? Sometimes I trade the chop. I'm stuck in a trade right now. I'm in the puts and we're in chop. But for the most part, I try to avoid it just because of this, just because you get stuck and you get trapped in trades. So I do try to avoid it, Craig, and that's a great question. Thank you for asking. All right, VIX is up just, I mean, it's teeny over, yes, over Thursday's close, it's up just the teeniest little bit. It's basically at its flat line, up 0.8% right now. All right, let's see if we get a rejection here at the VWAP or if it's just going to hold it. And Bitmine and MSTR are both looking pretty strong this morning, and that's because Bitcoin itself is really giving us a push. It's finally hit 70,000. It was up, I think, almost to 75. It's been in this range really, 65 to 70, but it's really given us a nice push today. And Bitmine, which is the basically the storehouse built on Ethereum, and MSTR, the same thing built on Bitcoin. Those are both pushing nicely because of the Bitcoin rise today. All right, here is our intraday resistance. This is also our opening range high. We're just about there. I will probably average the put trade if we start getting signals to move down. I feel pretty fairly confident that we have seen the high today. Now, that doesn't mean that these puts work. It just means I don't think we're going very much higher today. I could be wrong. I could be way wrong. But I think right here, this high that we hit, 659, but actually even this intraday right here, 659.0, I think that caps it today. I could be wrong, but that's what it looks like. All right, still giving us a slow climb. And I think DT, you're exactly right, David, that the market may go sideways until President Trump speaks. That is very, very possible. Mag's jumping around a little. Okay, here's a push. There we go. 6602. Here's our intraday short-term resistance right here. Let's see what happens here. See if we get a push up through that. It's trying. It's right here at our previous high of day from Thursday. That's kind of where this little intraday resistance has come in. We did beat that earlier, but we came back down under it. We haven't really been able to manage a hold above it. So let's see what we do now with this test. All right, Craig's saying WRT to BMNR. It's been ranging about 10% up and down every couple of days or so. Is there a way to take advantage of that? It's volatile. MSTR is volatile. You can try to gauge the direction and do, directional puts and calls on it. But for me, what I've been doing with MSTR is just credit put spreads and banking on the fact that it may not go below that certain support level. But you can try to gauge the direction and catch calls and puts on it. It's just, it's very volatile. But you are exactly right. There is an opportunity there because it certainly does jump around, doesn't it? You're exactly right. All right, silver down today, just at its flat line, really. Silver and gold kind of at their flat lines, not really doing much. All right, holding as of now, but it looks like it could try to break this opening range high. Let's see what we get. And if we get some put signals, like I said, I'm going to go ahead and average this trade and wait to see if we get another retest of this intraday support. All right, there's a little move down. All right, that's nice. MACD hasn't quite rolled over yet, so I'm still watching, but it looks like it might try here in a minute. Let's watch and see. 6,600 right on the nose right now on the SPX. That's the level being tested right now. Our MACD is starting to slow down. You can see the little bars getting shorter and darker. That's just telling you the upward trade has lost its momentum or losing it. What we'd like to see is for it to roll over and turn red like it did over here and here. It hasn't done that yet, so I'm watching. That's where I will probably average, meaning I will buy more puts at a lower price and wait and see if we can move down. I'm not going to do it yet because when I average, I want the trade to stand on its own, meaning I would take this trade. If I weren't in anything, would I take the trade were all the indicators lining up? So I'm not averaging it right now, and I might not. We'll have to see what we get here. Right now, there's no rollover yet. We're not moving to the downside yet. We're right here at this intraday resistance, which is 6,600. All right, Craig, under what conditions do you consider a trend reversal trade? Great question, Craig. Usually, if I'm going to trade a reversal, I want to see a lot of things lining up. I want to see, for example, over here, we get this upper edge of the VWAP. We get the price really testing the upper edge of the VWAP here. It's overbought here. So let's see where that was. That was at 1025. Not quite overbought, but the RSI is pretty high here. So, you know, if I'm trading a possible reversal back to the VWAP, like in this case, I might consider that once we've hit the upper VWAP, once the MACD is rolling over, I might have considered this put trade here. In fact, I think I probably did. I don't remember. So in that case, I might take a counter trend trade. And today, Craig, that was a great question. Today, the trend is hard to define, right? It's sort of felt like it was upwards here for the first hour. And now it's sort of felt like it's a little bit downwards, but mostly sideways. So in this case, it's not necessarily a trend reversal trade if we were to play puts. We're more sideways here. And that's actually the problem. That's why we're stuck. That's why I'm stuck. So, but great question. All right, David, the only thing you need to be careful about is that Trump is speaking in an hour, that the green bars volume overall are higher, even if it's tiring. That is, I would agree with your assessment. We have to really be careful with what happens when President Trump speaks. He usually tries to get the market to go up. He really does want to see the market go up. That's one thing he really likes. But the last time he spoke, the market rejected, and that's because of his war rhetoric. As far as volume bars being mostly green, the recent ones are, David, but if you look left, you'll see that we've got a couple of really high volume bars on these two reversal spots. We had two really big red bars on this reversal and this reversal. And we had one good sized green one at the open. So you make a good point about checking volume. You should always check volume. But if you notice this, let me make this indicator bigger so you can see it. This is called the volume average indicator. And this indicator is showing us descending volume. So you can see by looking at the tops moving down, you can also see this yellowish beige line. That's the average volume. Now, this is based on the minute chart and it's based on 50 periods. So it's looking at the volume average over the last 50 minutes. And this line shows you where the average is. The average is coming down and the volume is largely staying below the volume average, telling us that volume is wearing down. It's just moving down here, not a lot of volume, which we expect when we see chop. We're in chop, we're sideways. We expect volume to be descending when we're in sideways chop. That's exactly right. So definitely making good points there. I appreciate it. And Craig saying, appreciate your educational approach. Thanks, Craig. All right, guys, we are reaching the end of the stream. We have reached the end of the stream. I'm going to go ahead and sign off here. I am going to average this trade probably any minute now. It looks like it's given me the sign to do that. And so I am going to go ahead and average in on that trade, but do not, this is educational only. So if you follow at your own risk. But I'm going to go ahead and wait and see what happens with this if we get a move down. And on averages, I'm only looking for a break even or a small win or even a small loss. So I'm very cautious when I'm averaging. All right, Guy, you're welcome. Craig, you're so welcome. Thank you guys so much for joining today. We'll be back tomorrow at 11 a.m. Eastern. And as David says, watch for the 1 p.m. mark because I think we could see some big volatility there when President Trump begins to speak. So keep your eyes on that. And we'll be back again tomorrow at 11 a.m. Eastern. I appreciate you guys so much. We'll see you tomorrow. Bye for now.